to this public hearing on the conditions on the active account requirement, one of the key deliverables under the new EMIR 3 framework. Many thanks for you having agreed to join today, either in person or virtually, to engage with us and to ideally provide additional input. Without further ado, to not waste time on our list of pertinent issues that we want to discuss with you, I would like to suggest for Nicoletta to kick off the discussion, and then my colleagues will guide us through the set of questions that we have. Nicoletta.
Thank you, Klaus. A few housekeeping before opening for the presentation and discussion. The meeting will be recorded, so we assume that by your participation here, you agree to the recording being made. The meeting is an open one, is a public meeting, so please remember it when you make your statement. Is not a Chatham House rule type of meeting. Having said this, the objective is of all traditional open hearings of ESMA before the final term for submitting the responses to a consultation paper, to come here to get early feedback or provide any clarification you may need. At least we hope we will be able to do so. The objective is not for us to indulge in the presentation of the paper, which we assume you all read, but to get your feedback and to interact with you. So I will ask my colleague to introduce. We have divided the paper in the three big chunks: the operational conditions, the categories, and the reporting. To start with the first slide and first set of questions.
Thank you, Nicoletta, and good afternoon, everyone, and everyone online as well. So we will kick off with our first section on the operational conditions and their stress testing. As you're aware, there are 3 operational conditions under Article 7A of EMIR, whose aim is to ensure that the active accounts at EU CCPs are functional and operational in practice, but also suitable for clearing large volumes and flows of transactions which are redirected at short notice from a clearing service of substantial systemic importance. I will run through the different conditions briefly, but also try to outline what we've proposed as part of the ESMA draft RTS before opening also the floor for questions, so that we discuss the conditions as a package at least. So as you'll remember, the condition A is about ensuring that the accounts is permanently functional, that including with the IT connectivity, the internal processes, and the legal documentation associated with the account being in place. As part of our consultation paper, we have proposed that the counterparty be required to establish a legal contract or a legal arrangement or contract with an authorized CCP. This can be done directly or indirectly to support the provision of clearing services in the relevant derivative contracts covered by the active account requirement. Second point would be to have open cash and collateral accounts with sufficient financial resources to meet the participation requirements defined under EMIR. The third point would be also to outline internal policies and procedures to access the clearing services. Here again, this would be directly or indirectly. And then to also have a live IT connection with an EU CCP directly or by the clearing member or the client providing client clearing services. We understand overall that these legal and technical requirements are already required as part of the CCP's normal onboarding process and is regularly updated as part of their due diligence checks. So, and therefore that these requirements would not generate excessive additional costs for the counterparties, but would be also especially curious to hear your feedback on these points and these details. The second, or I would say condition B, is a condition for the counterparty to ensure that it has the systems, but also the resources available to be operationally able to use the account for large volumes of derivatives, and that it is able to receive also a large flow from transactions of positions which are held at a clearing service of substantial systemic importance. Whereas condition C is more focused on the account itself and whether the account can clear all new trades in the relevant derivative contracts which are cleared by that counterparty at all times. So here, for conditions B and C, what we have tried to do in our consultation paper is to detail a number of requirements, first of all, for the counterparty itself to have set up the internal system to monitor its exposures, and to also develop the internal arrangements to support a large flow of transactions from the positions held in a clearing service of substantial systemic importance, but also to analyze how this would work under different scenarios, including by assessing any potential legal and operational barriers to that effect. Second point would be to have appointed at least one dedicated staff member with sufficient knowledge on clearing arrangements. And thirdly, ESMA also proposes that the counterparty should be able to ascertain that the account has the operational capacity to sustain a rapid, but also an important increase of volumes and flows. So to achieve this, what we've proposed in our consultation paper is to ensure that the counterparty is able to obtain a written statement from the CCP where the account is held, that it has the operational capacity to clear up to 3 times the notional amount cleared for the previous 12 months. This should be tested both for house and client accounts, and clearing members would have a role in passing the certification down the clearing chain. In our view, this proposal has the advantage of relying on certifications from EU CCPs and not requiring similar certifications from all clearing members, on relying also on the information that the EU CCP has, especially with regards to information on the overall client clearing activity, but also being agnostic on the type of account structure down the line. Of course, we're more than happy to hear any suggestions or improvements that you may have on these points going forward. And finally, before we move on, I would say to the more formal questions, to look at how these conditions are to be stress tested. The level 1 requires that these conditions be stress tested at least once a year. So we've proposed basically to correspond to condition A, that the counterparty conducts a technical and functional test on the IT connectivity, which is detailed under condition A, but also is able to obtain another written statement from the EU CCP that the account can withstand a substantial increase in outstanding, but also in new clearing activity of up to 85% of the total clearing activity. This means at EU CCPs, but also in third country CCPs from the CCP. Same indirectly being passed on via the clearing member. This has the advantage of relying on public figures, which would be published by ESMA on an annual basis as part of the new requirement under Article 6, and of harmonizing the conditions of the stress tests across EU CCPs so that the levels of stress are comparable. And finally, we have tried to also account for a certain degree of proportionality as required in our mandates, and to take into account the size of the portfolios of the different counterparties, meaning that the frequency of this requirement for stresses would be different depending on the size of the counterparty. So counterparties with a notional outstanding cleared of less than 100 billion would have to fill this requirement once a year, whereas those who clear more than that should meet this requirement every 6 months. So, sorry, this was a lot in a short period of time, but this leaves you a maximum of time to also be able to answer our questions. Some of them essentially repeat what you've seen yourselves in the consultation paper, running through conditions A, B, and C, our approach for the stress testing, but also the differentiated frequency, and whether there are other suggestions or approaches to also improve perhaps the proportionality principle that we also have to take into account. I would give the floor back to Nicoletta and Klaus, and then perhaps to you. Thank you.
Before opening the floor on this question, I see a message in the chat that says that there are 2 questions for clarification on the scope. We started, of course, with the operational condition because we assume we don't consult on the legal interpretation of the level 1 and the scope of those who are captured by the RTS is the one set into the level 1. So if I can open then the floor on the part that was just presented by Claire.
Maybe I'm sorry, I'm the one who asked the question in the conversation, and it's because we are quite. I'm Nicole Montoya from the AFG in France. We are quite aware that the scope depends on level 1, but nevertheless, while we refer to level 1 and to the consultation, we do keep on after several weeks of work having some 2 uncertainties. So that's why I'm happy to hold my questions, but I'm also happy to ask them if you give it 5 minutes, because I guess some other people would have the same kind of questions. Up to you. Let me know.
Well, you can just quote quickly your question, but I have to warn you that level 1 interpretation is in the domain of the European Commission. The European Commission in part has already responded to the industry with a letter that was widely disseminated. They may also decide to do further initiatives. It's not for us to elaborate or discuss on what the Commission indicated being the approach, or on questions different from those already discussed, start providing responses that may then belong to the Commission in its own role.
Okay, thank you, Nicoletta. So in 1 minute, because actually it's in between RTS and the level 1. The first thing is that we would welcome explicit mentions on whether a third country entity within a European Union group should or should not have an active account when trading EMIR scoped in derivatives above threshold with European Union banks or non-European Union banks. That's the first question. The second one is also between the group and entity in a group. We would welcome explicit confirmation that entities, be them within European Union or non-European Union, without clearing activity, but within a group with clearing activity, should not.
We have noted the questions. I think that indeed they deal with level 1 interpretation. So if you don't mind, we will park and we will go really to what is the scope of the consultation paper, the objective to discuss the key question.
That's the one. Okay. So firstly, obviously, please want to thank ESMA for organizing this meeting in person. It is very much appreciated that you take the time to sit down with us, and obviously as well open the floor to many online. The second thing I wanted to say as well, we want to thank ESMA for putting in a lot of thought into this consultation paper. It was a pleasure reading it. I think a lot of things are clear, some others are not, and we will actually put in our response a lot of efforts, obviously, as well, ask for clarification where it's needed. The biggest issue, yes, we have on the reporting front, but we'll come to this later, and we will come, I think, on the operational conditions. There are a couple of things we would like to know, but I want to phrase this maybe first, because the biggest issue is the certification process, which seems to be quite cumbersome. And if there is some, so it seems to be really cumbersome to do this basically with the clear members and clients providing clearing services. And if there would not be basically a possibility to get this certification, maybe directly from the EU CCP, sorry, Matthias, because they would actually shorten the way and actually would reduce the burden basically on EU participants. But that is one suggestion. I think we can debate that, but I think we want to get a little bit more comments here in maybe from the floor. I don't know.
Lambert, yeah, of course. Lambert Kühling from the German Banking Industry Committee. Two things I would also fully understand. First of all, thank you. The second, as to these other interpretational issues, we fully understand that these are not issues which can be resolved at least, but we received a lot of feedback on that. We will put it in our response simply because is the unclarities or the lack of clarity on some of these issues will exacerbate the problems with the implementation. And this is not cannot be easily resolved. We will also present it to BaFin, so to our regulator. So, but it should be, I think, clear where the problems are. I don't go into the details there. As to the second,
I can assure you that the Commission participates to all our discussion, and at the end of the day, it is ultimately responsible for endorsing our proposal, so issuing the final regulation. So yes, if there are issues, please list them and then they will see.
Great. So some clarifications will help everyone to get things smoother for regulators as well as for the market. As to the other issue, sort of more as to start the conversation, I think the general problem, which directly is connected to reporting, but also the details of these, what we're now discussing, the actual, they're connected, of course. We fully understand the sort of the constraints granted by level 1, so that there is but we see there is a high degree of technicality, very detailed requirements, very formal requirements as well, written notes, etc. And I think to reiterate or support what has been said, anything which would help us to reduce the complexity of these, the factors that have been named are correct, but the way to demonstrate them should be probably there's a solution to limit it as much as possible to and to focus as much on those elements which are already there, which TR reporting and whatever the CCP can provide, then look at the rest separately. That would greatly help. That's just to introduce a general. So it's something which we heard the market's very concerned about.
Facts to comment now or just on the first? Oh, put it on. Thank you. Matthias Graulich from Eurex. Just a few comments and also perhaps directly responding to Ruina's comment. I think the certification requirement when it comes to the CCP links to the capacity of the CCP to process certain volumes, be it daily activity or being an open notional. And I tend to agree that I mean, this is something we can confirm from our end that we have the capacity, this threefold increase. And I mean, an account is an account from a CCP level. Therefore, I think one can save this administrative burden and get a confirmation from the respective CCP whether the CCP is capable of dealing with those volumes. I think if I read through the requirements, in particular on the stress test, to say counterparties need to run technical and functional tests, need to run simulations on their capabilities of complying with the requirements under B and C, then that is something which we cannot, from a CCP perspective, really confirm just based on the account capacity perspective. What needs to happen in order to get a feel for whether people are capable of complying with these requirements is really to run some type of fire drill or simulation. So what you know from CCPs, for example, in the so-called default fire drill, I mean, one can imagine that we do something and organize something similar, that people have to participate and based on this participation, we see the results and see volumes cleared and open interest. And that is something we could confirm from a CCP perspective and show to ESMA as a demonstration of that people have shown or what people have done in order to demonstrate their compliance with these requirements mentioned under B and C.
There is an immediate reaction from FIA.
I want to thank Matthias for this intervention, which is it's quite pleasing to hear as well. But as you mentioned, the fire drill on the stress testing as well, we will suggest actually potentially as well taking the client out of the equation, because I think fire drills are also normally not done with the client. I don't know if you agree with that as well, because I think it would be helpful.
Yeah, I guess I mean, the default fire drills are today primarily with clearing members, but also with clients who, for example, want to bid. I think if you want to do a demonstration that everyone is capable of doing it, it should include the client. And if you think about a release rollout or something, people are testing this also from a client perspective today in all the simulation environments. Therefore, I think technically that should largely be in place already today, if you want to use that.
Where we see also issues on what Claire presented on the dedicated staff members, we completely disagreed with it and think it's not really necessary and should be thought again. Could this be not the responsibility be basically given to a team or a head of department function or anything, but certainly not just really one single dedicated staff member. It sounds a little bit like a key personal theme or things that, yeah, we were not entirely convinced that this is necessary. And then we should think about that there's not only one EU CCP, there is several EU CCP. So just really thought maybe we can think about something else. And in terms of, we were thinking as well of potentially legal liability for this person. So there was a little bit of unhappiness when reviewing this in the consultation paper.
Hi, so thanks for Ulrich Karl Ister. So thanks for inviting us and thanks for organizing this workshop. So mirror Corinna's comments. I would like to go back to the stress testing bit, because as we read your RTS, and it's more or less a question whether we read it right, was that this was mainly a requirement to the CCP to confirm that they can actually process the added volume, so either for 85% or 3 times. So, but I think we didn't read anything about the simulation in there. So we thought it was more the requirement, kind of a certification of a CCP that we can process this volume. And with that, probably it would actually make sense if so in the easiest way would be agree with Matthias. I think technically there's not really reason why, if they can do it for some accounts, but not for others. So potentially the easiest way would be really that they just put it on the website that they can do that, so that the certificate is then done in a fairly straightforward way.
There are also level 1 requirements to be complied with, where we will have to provide since there is a mandate. Yes, please, you want to read?
Yeah. Again, many similar concerns, or issues. So sorry for being a bit repetitive, but I try to find a new angle. The stress testing, to go on that is of course something which received some concern in our market, and simply because of the stress related to a stress test. An actual stress test is something which takes a lot. Takes up a lot of resources, it takes a lot of time. We know it's stress testing by the CCP, so anything which could help to limit this to what is really the scope and the key function of it. One thing, of course, we would not want is that there is a separate sort of one stress test the CCP makes, and then another one just for that purpose. It should all be coordinated, synchronized, and whether it is really necessary to have half-yearly stress tests, even for larger volumes. I think considering the impact an actual stress test would have, that of course depends on how it is structured. Like that, then we would have to think of that. another issue on these resources, etc. Again, the formalities. I think the key. There's no question. You're absolutely right that the report is absolutely right. There have to be sufficient resources. There have to be the processes, everything in place. But whether it has to be done by written documentation, demonstrated by written documentation, specific names, I think that might be something one could consider. Jumping from to the issues, but sort of the stress test is one thing to reiterate that which raises concerns, because if it's a real stress test, the full stress test, it's a major exercise. It should be something which should not happen too often and should be sort of streamlined to make it. And I'll leave it at that. Thank you.
Any question also from those in remote or reactions on this first part of the document? Okay.
Hello, it's Bill Stenning
Please.
at SocGen. Sorry, I did raise my hand. I'm not sure if you were able to see that. Just wanted to make an observation about the scale of this exercise. If we do include all clients, I think we're talking about something where in excess of 1,000 potentially. I think that was a number that came up on a recent industry call. So trying to coordinate the CCP, probably a couple of dozen members, is quite a different scale of challenge to trying to coordinate 1,000 clients plus at the same time to do this stress test. And while I have some sympathy with Matthias's comments that there are some elements that do go further down the chain, it's not obvious to me that in the context of proportionality that including over 1,000 firms in this process twice a year is a viable solution, and that we can achieve most of the results and a satisfactory level of comfort just between these CCPs and its members without the clients.
Perhaps just one quick point on our end, just to remind that we're of course bound by the level 1 provisions and that they apply to the counterparties which are subject to the active account requirements. So differentiating across clearing members and clients may be difficult from a legal perspective and not necessarily only what makes sense from a operational standpoint, but just to react on the points on the clients, we are bound by what is in the level 1. So please consider this also when making suggestions and proposals so that we can try and hit the mark here.
I don't see any other hand here in the room. Please.
Thanks, Nicoletta. Maybe just one more point to make. You mentioned you write in the kind of description for RTS that for operation conditions that this doesn't include financial resources. But I think then later in the actual RTS text is not that clear. Can we maybe just confirm that this is the case, that in all this operational review that is really only about operational conditions and not financial resource like collateral? Please.
Any other contribution?
Sorry again. We also heard that whether if you go to stress testing, whether the parameters 85%, etc., are really that they're very high. We know where they come from, or we see the connection, but it should also be considered whether this is really again, the exercise would be major, and anything which sort of simplifies it and makes it sort of workable for everyone would be helpful. And even the threefold increase or the 85% is something which I think we believe is not that realistic, even in a crisis. If there would be something like of a major sort of part of portfolios, would never be close to 100%, but it would be significantly. But yeah, but it all comes into it's all plays into place. The more they're all building blocks, everything which makes it a bit more workable appreciate it and fully understood there are constraints under the law. But even there, whatever can be done would be greatly helpful.
I guess, I mean, unfortunately, 85% is level 1, right? So there's limited room to maneuver. But what one could consider is to differentiate between new business and transferring legacy book. If you think about these kind of simulation scenarios where I would clearly see a big difference also from an effort perspective. And I guess that is not prescribed in level 1. There's also, I mean, in B and C basically refer to new business and the legacy book. So you have this natural differentiation already somewhere in the level 1, right?
I don't see any new hand. Please.
Might have been raised already, and I was just not careful. And just read on the frequency of the stress test. You did mention it.
Yeah, but
So I support the statement that it actually makes it could overly make it complex actually, if there would be different types of frequency for the stress test, depending on the size of the counterparty.
Green, I see your hand now.
Thank you. Thank you, Nicoletta. Apologies. I have some colleagues in the room, but I was not able to travel. And I just wanted to maybe add one point on the stress testing questions. So I think this has raised a lot of kind of thought among our members about how it's supposed to be approached. But I think overall, we've concluded that, provided we've understood the stress testing requirement in the correct way, it was probably practicable as a way forward. But in particular, I think what we're trying to ascertain is whether, as some of the people that intervened so far suggested, is that stress testing is somehow taking place at the CCP, and then a certificate is issued that cover both the clearing member and the house and the clients in one certificate, and then understood that the clearing members, given the level 1 requires this, would then have to pass it on to the clients. But we wanted to, make sure that there is only one certificate that would cover both the clearing member and its clients. Otherwise, I think, as some people mentioned, if you had several different certificates, it would become, for each client, it would become very impracticable. So I just wanted to kind of put that out there. And similarly, we also would like to get some reassurance that, if counterparties ask from their EU CCP to receive a certificate, there would be a response from the EU CCP. Otherwise, it would look like it would be in breach of the requirement, despite having, done everything they could do in their power to get such a certificate. I think that's also one area where we would welcome some comfort from ESMA. Thanks.
I see that we have already a CCP reacting.
Yeah, I mean, and I partially already responded to it, but just to make clear that we all have the same understanding. I think from a CCP perspective, we can give a certificate, and whether we give that to the client, the clearing member, or directly to ESMA on the capacity we as a CCP can process, that's one question. What the certificate at this point in time would not say is that the clearing member or client is capable of complying with the requirements B and C under the operational conditions, and that would clearly require some type of testing, fire drill, in order to demonstrate that people are capable of doing that. And then from a CCP perspective, what we can see is the result. We see cleared volumes coming through, and we see notional outstanding kind of being created. And if that at the end is so we can then say this client or these clients have participated. But I guess whether this then is complying with the 85% requirement, also we cannot confirm from a CCP perspective. I think only ESMA has the necessary data to compare what people put into a fire drill and what would be the 85% requirement.
Thank you. Perrine, I still see your hand. Do you want to come back?
No, sorry.
Okay. Yes.
Answer to. Sorry again. But Richard, fully understood, the CCP can only confirm what it sees and has in its power. However, we should, of course, try to explore how we can make this certificate as useful as possible for everyone. So to cover everything that is. So a CCP knows which accounts it has. It knows whether they're sort of the documents are there, the legal documents are there. So that is all sort of demonstrated by the membership or the registration and the certificate. And so that's probably one way to look at it, to see what is already there, what could probably be done without little, what could be perhaps improved, I don't know, but that would be helpful to every member. And then look at what the sort of the remainder that is where. And one thing I wanted to say, we all want that this thing works. We want that the regulators have the information they need. So it's not meant to reduce the information, but looking at ways how to improve, to make it as simple and easy as possible. Not mentioned. It's not the intention to reduce the insight of the regulator supervisors and everything.
Thank you. I mean, indeed, it is our interest to try to have a system that is as simple and as workable as possible, as long as it complies with the conditions that are set in the level 1 by the co-legislator, and we were not involved in that type of process, and the number of obligations are quite specific, and we will have to be faithful to what is there. But of course, one of the purpose of doing the consultation, and as you know, we started working even before the text was finally adopted, in order to be able to have the 2-month consultation in a mandate that is very short, is 6 months, is precisely to get all the possible input that could help us in finalizing something to submit to the Commission that is as helpful as possible to all the interested parties. Are there other suggestions, questions? Claire, you want to ask something more specific, please?
Perhaps just to explicit some points also on what we've consulted, the draft RTS as it stands now, and of course it can and will evolve with the finalization of the process, requires that the certification is issued for the account of the counterparty. I'm pointing this for the previous question, but it's also linked with the fact that a counterparty has its own internal systems and resources to be able to meet the other conditions, right? So there's condition B on the counterparty and condition C on the account. But we would also expect these accounts to be different and to also apply for the transactions which exclude client clearing activity. So at different levels of the chain. I think that's also important to understand, at least in what we've proposed in the draft consultation. For the operational part, at least under EMIR, these questions on operational capacity are indeed different from financial resources, because the definitions in EMIR are different in the participation requirements, right? So they don't, operational doesn't mean the financial resources in itself under EMIR. However, I think we've noted the points that you've mentioned on the resources for condition B. We'd be curious perhaps to hear if you have alternative suggestions or improvements, but also on the point of proportionality, because so far most of the proposals are to remove aspects, but how do we actually provide more proportionality if we reduce differentiated frequencies, etc. So I think that would be also helpful for us to have suggestions from you in the room or online. Thank you.
Okay, thank you, Claire. But I think we made some suggestion like the certification as possible from the EU CCP directly to ESMA, so that would help and introduce more proportionality and make more complex, because you should think about as well, all of those requirements apply to EU participants. They do not apply to non-EU participants. We're making life from an administrative and all more burdensome, and I just really think it should be the aim as well of the RTS and the next steps, basically to do as much as possible to take away the burden, and whatever can be done on a dedicated staff member. This is not a level 1 requirement. ESMA can set the operation conditions, and I just read to this again places some from how firms basically tick from a compliance perspective adds burden. So just really make it basically an entity basic that the head. We're making some suggestions. I can't exactly remember what we're suggesting on this, but just really as much as we can do to take off the burden of those in-scope participants, because others do not have it, to keep them competitive should be a key of the next steps.
No, understood about the proportionality. Sure whether we have already a perfect answer to that, but well, for the one thing, if there, let's say the cycle of stress test after 1 year, I think yes, if there's only 1 year, there's no proportionality step there. But however, if you could also have a simpler stress test for smaller ones every year and a more elaborate one for larger ones, so it would always be risk sort of related. So the proportionality, I think, would permit everything. Yeah, the level of scope, the insight. As to resources, I don't think it's necessary to, or the name is not important, but that of course an institution or a market participant has to demonstrate, or should any even without EMIR, there would be I think a supervisory expectation that there is a sufficient market team there, and sort of there has to be operational operational procedure. Everything has to be there. Again, proportionate. The more complex your desk is, the more there should be sort of input into how it is done. I think that it's not sort of easily narrowed down to specific factors, but the proportionality would be everywhere. We would have more expectations, higher expectations, and if you have a more complex desk, and I think that would answer it. That the problem, I think, that the level 1 text is very specific and says it has to be proportionate, but already puts in many details. So how to do so within these narrow confines, how to work with it, I think proportionality would then have to shift that, not by defining sort of more steps within the already very narrow or very strict. But yeah, sorry, repeating myself.
Okay. The next solution as well that we offered was on the stress testing to take out the client out of the equation. But Matthias says there are clients that bid and they need to be in and have technical capability, but there are some suggestions that could be thought about. I'm not the fire drill or stress testing expert, so the right people need to be that. You need to discuss it with the right people, and we have them obviously in the membership, and Matthias is here as well.
I think that was one of the examples where we tried to hint that this applies to at the level of the counterparty, which is subject to the active account. So if the client is subject to the active account, it would be difficult not to apply this requirement.
We did not come to this conclusion, but we will have to scrutinize the level 1 text and come back then in the response on that.
Yeah. We don't have to solve it today, of course, but this of the proportionality is one of the aspects that is very much interesting for us. It will help us in improving. There is something though, before I see that we have a hand from the remote, that I would like to clarify and for you to remember. I heard here and there somebody referring to ESMA, ESMA can control, etc. I mean, this is not exactly what is in the level 1, because the link is from the entity subject to the active account to their national competent authority. Then we will be receiving reporting through the national competent authority, etc. But ESMA doesn't have an outreach directly to the counterparties. Some more now with EMIR 3 with the European CCPs, but still fairly limited. So also think how the system of the supervision of the compliance with the active account has been designed in the level 1. And again, we are not here to discuss what is in the level 1, but what's there matters. So we have Bill Stenning.
Just very quickly on an idea on proportionality that we'll probably have a talk about offline and come back to you on is, for example, since all clients access the CCP through a member, you could desynchronize the stress testing between members and CCP and the clients and the members. Otherwise, trying to get this 1,100, 1,200 firms to do the same thing on the same day is going to be a whole industry in its own right. But if the client can confirm with its member its volume requirements, and the member can confirm with the CCP its entire volume requirements, you may get to the. So there's some possible creative ideas, at least to de-link these, and then potentially you might have different frequencies between client and member depending on the size of the client, which would adopt the proportionality. So we can do a little bit of work on this and come back with some ideas in our response.
Thank you. I see, please. Let's go on.
Nicoletta Isabella from just about thinking about potential just to take on the point about respecting the level 1, and thank you from each time reminding us of what is in level 1 and what can be done on level 2. There might be a potential that the counterparties on the level 1 have the opportunity to fulfill certain obligation by relying on someone else. So then you could, for example, find a way to bring in proportionality by counterparting, demonstrating it, but by relying on certain things which are done elsewhere. Thank you.
Thank you. And then along the table, was there anybody else willing to intervene? No? Okay, then I don't see any other hand from the remote. So for the last time, if from the floor there are no other requests, we can then move Claire or Raphael to the next set of questions.
Okay, I think the second section we can also start addressing, though it will be mainly my colleague Raphael who will cover those points with you. And they're here, so I can nicely hand over for the representativeness criteria.
Yes, so if we move to the so-called representativeness obligation, which would be the fourth condition of these active account requirements, of course, it only applies to counterparties above the 6 billion threshold of national amount outstanding cleared. And as per EMIR, so they should clear in the active account trades that should be representative of the derivative contract they clear at Tier 2 CCPs or at the clearing service of substantial systemic importance as defined in Article 25(2)(c) of EMIR. So this representatives obligation basically applies as an obligation for counterparties to clear on an annual average basis at least 5 trades, with a small exemption for counterparties for which it represents more than half their trades, in each of the most relevant subcategories per class of derivative contract and per reference period. The assessment of the so-called representativeness obligation shall be based on subcategories. And for each class of derivative contracts, the number of subcategories is the result of a combination of the different size of the trade and the maturity range. So in the draft RTS, ESMA was entrusted with a number of things to define a number of things. First, we have to select up to 3, but not necessarily 3 classes of derivatives contracts for each clearing service deemed of substantial systemic importance, i.e. The Euro OTC interest rate derivatives, the Zloty OTC interest rate derivatives, and the Euro tiers. In order to do so, we have assessed the level of clearing activity and the risk associated with EU portfolios in this clearing service of substantial systemic importance. We also considered market trends and developments, such as the growth of a given segment and the share of the clearing activity taking place in the EU and at Tier 2 CCPs. We also considered the available liquidity on these products in the Union. So based on what I just described, as you're aware, the proposal in the consultation paper is proposing to select 3 classes of derivatives for the Euro OTC interest rate derivatives, so namely the fixed to float, FRA and OIS, 2 classes of derivatives for the Zloty OTC, IRS and FRA, and 2 classes of derivatives for Euro tiers, Euribor and Ester, so considering together option and future for both classes. On top of that, of course, ESMA is also requested to specify the different maturity ranges subject to a limit of 4 maturity ranges and the different trade size ranges subject to a limit of 3 trade size ranges. So on this basis, so the number of subcategories result from the combination of these 2 parameters. So in theory, you could have, and that's actually what you have on the screen, for some cases, a maximum of 12 combination per class of derivative, on which counterparties will have to clear representative trades based on the actual activity. In order to determine what would be the most representative combinations for each class, sorry, bear with me a minute, we rely on EMIR reporting, and we analyze the actual portfolios of counterparties that we assess were likely to be subject to the representativeness obligation based on the EMIR data available to us. So that's where we were going to the details. You have already on screen kind of an aggregate view of what is the proposal we are making in the paper. On top of that, we also had to set the number of most relevant subcategories per class of derivatives to be represented in the active account. According to EMIR, this number cannot be higher than 5, but it's a maximum. So we also fine-tune this number depending on every class of derivatives. Taking into account also the different characteristics, and notably to reflect the size of the respective markets, the liquidity, and the current split also between Tier 2 and EU CCPs again. And finally, we also had to set the duration of the reference period, which is the one used to assess whether the minimum of at least 5 trades that I already mentioned is met. So level 1 is already quite precise in that regard, because it's mandates that the reference period should not be lower than 6 months for counterparties with a notional clearing volume outstanding of less than 100 billion euro and 1 month for counterparties above. So again, in order to determine what would be the appropriate reference period, we assess the number of trading days, the number of cleared trades in one full trading year for counterparties below and above this threshold of 100 billion euro. As well as the split of their activity between third country and EU CCPs, which brought us with the proposal that you have on screen, where we've been, as a general, I won't go into the detail of each category, but basically the proposal, as you can see, is a bit more stringent for OTC, Euro OTC interest rate derivatives, where we feel that the depth of the market and strong clear activity across all maturities and trade size make it let's say, easier for counterparties to use a maximum flexibility. Where, for example, for the zloty, we went with a more with a narrow approach, given the somehow lower activity and less developed liquidity. I think I will pause here just to go to the question that we highlighted on the screen, which of course echo the one that we put in the consultation paper. So basically asking the stakeholder whether they agree with the proposed classes for all the categories of instruments, whether you agree also with the split in terms of maturity and trade side ranges, and the reference periods proposed in the consultation paper. Back the floor to you, Nicoletta. Yeah.
Thank you, Rafael. So now let's see the feedback on this second part of the paper, which was very much discussed in the past month. I see that FIA Corina is willing to break the ice.
Yes, I will do that. Obviously, we're still debating. We have 1 week left to finalize the response. I will not bring up our debate from the past, what 3 classes of derivatives mean for us, but you can come to different conclusion, but it is what it is. We were pleased to see on the Polish zloty that ESMA listened, that there is this lack of liquidity. So we're really pleased about the outcome. On interest rate swaps euros, we're still debating, but I guess we will be supporting ESMA. When it comes to steers, we think it is, ESMA has followed a little bit more of a heavy-handed approach. So we're still debating. Options is a very complex product. Should it be in? I mean, there's obviously a level 1, but then there's also some flexibility. I guess it's in. So just really on the steers, we have still stomach problems with it and debating, but also the question, could we think of that options could be excluded from the requirements?
Let's go around the table.
And sorry, we seem welcome that sort of the level 1 text requires a very complex matrix. We think too complex and unnecessary complex, but we see the work that has been done to reduce the complexity to some extent. So we realize and welcome that. Just to reiterate, the problem areas are the zloty on the one hand, which I think is much as done as one, or a lot has been done there. And on the steer side, it's the same, whether it could be perhaps looked at whether you reduce 1 from 4 to 2, but anything which helps there would be helpful. That's basically our current status of the debate. But in general, we see that level 1 is taxing, but we have to say it is unnecessary complex on level 1. It's too much of. But thank you.
Thank you. Who's next?
I think the on the OTC or the euro side makes sense for us. The maturity ranges and the trade sizes, also the differentiation by the different products from a trade size perspective, and of course from a maturity range makes sense. On the STIR side, we have looked at the distribution, and while it generally from our perspective makes sense, there is one minor topic which would be on the maturity ranges. Instead of 12, 18 and 18 months plus, we would suggest to do 12, 24 and 24 plus, just because of the number of trades we see in these buckets would then be more equally reflected. Other than that, that looks all good from our perspective.
Thank you. Perrine.
Thank you. I think I would echo what has been said. The level 1 text introduce representativeness, which creates some complexity. And I think for some of our members, especially the less sophisticated one, it remains a concern. But overall, in terms of the proposal that ESMA has put on the table, I think we very much welcome the approach taken to Polish zloty and on the Euro IRS. There's a lot of subcategories, but we're not overly concerned. And I think on STIR, it's an area we're still considering, and I would probably echo what Karina said, that it's maybe the area which is a bit more heavy-handed, but I think overall we welcome that ESMA took on board some of our concern, in particular on the Polish zloty.
Thank you. I see another hand, Matthias Verstegen. Sorry for the pronunciation, which is certainly not correct.
No, it's quite close, no problem. Yeah, hi, I'm Matthijs. I represent the Dutch pension fund sector. So we also started talking through this representativeness criterion with members, and my members are parties that actually don't trade very often. Once the interest rate hedging policy is in place, you need to do only a low number of trades to keep your portfolio or the level of your hedge in place. So representativeness is particularly burdensome for my members, and the sort of little exemption that was referenced can help a little bit for some parties, but not for all. I think we don't really have any feedback on the classes. We would urge ESMA and the Commission to come with as much sort of guidance on how to interpret representativeness, because I do see a lot of differences still in interpretation. For example, on whether you define your subcategories within the reference period or before the reference period starts. And if you have a low amount of trades, it's really hard to deal with this. You have to sort of be very well aware, potentially at the beginning already of the reference period, where you're going to place your trades. So it will have a high impact on my members. So any guidance and interpretation, how this works in practice, would be helpful.
Hi, it's Ulrich again. Can I maybe add some counterpoint? Because I think when we discussed it, when we discussed this, we actually realized that it was actually quite helpful that you didn't specify if you use the previous reference period or the current reference period to drive the number of transactions, because we saw, depending on what kind of industry, what players, it might be different what works best for them to actually figure out how that works. So in this respect, I think we found it quite helpful to have some space for interpretation or kind of for firms to sort it out themselves. And obviously kind of, I think even with RTS, and obviously you had to kind of take a level 1 text, which maybe wasn't really ideal, and make something, as you say, workable out of that. I reckon with representativeness, we will find over time a lot of edge cases which will be really, really difficult. So maybe that's something that even has to somehow be kind of a living thing, but you maybe revisit that in a year or two when we figured that out. So I reckon for a big bank, it's usually shouldn't be a problem. But I think the problem is, as Matti said, for kind of pension funds that don't trade often. So there are some provisions level 1 that cater for that if you don't trade often, but I think they don't cover every eventuality. So there will be cases that just fall through the cracks. One thing we said that definitely shouldn't happen is that any firm that wouldn't trade otherwise has to trade just to get their number of representative transactions together. I think it's kind of clear from the text, but again, there might be some reasons that the rules are still a little bit too stringent, driven by level 1. So I'm not blaming you. That maybe some firms realize that they end of the day kind of feel pressure to do a trade, just to get the numbers. And if they do, there definitely shouldn't then be any concern or any chance for them to be seen as market abuse. Because usually that then would be wash trades, and wash trades usually are something that are a big no-no in terms of market abuse.
Thank you, Ulrich. Other questions from also the remote suggestions, requests on this part of the document?
Yeah, thanks. Mark Dogen from Rabobank. I had a question regarding the underlying for the stir trades, because it's now referencing just 3-month interest rates. But what I understood is that we see mostly the interbank trades being based on a 6-month rate. Let's see some more clarification on that point.
Yes, so in the sample that we used for our analysis, it is mixed. It's not often easy to reconcile in EMIR if it's 3 months or 6 months. We can say that the majority is the 3 months Euribor future.
Of course, if you have different type of evidence, etc., one of the objective of the consultation is also to provide us with feedback on this. What we have done in terms of analysis that you have seen in the paper comes from the information that it is at our disposal on the basis of reporting, etc. If on any of those part of the document you have different information, different views, etc., please substantiate your response as much as possible. This is also one of the objectives of the consultation and the discussion. Thank you very much for this. Anybody else from this side of the table or from remote?
Hi, everyone, and thanks for taking the time. I had one quick question on representativeness, is to ask if the concept of best execution also has been, discussed, because we received some comments on our side about the trades that you need to do for representativeness and the best execution, and sometimes those two might contradict.
Well, again, here we are moving to the realm of level 1 and what the legislator dictated, and it is clear that you have in EMIR the obligation of respecting the representativeness. EMIR is also, let's say EMIR 3 is also more recent compared to the general obligation that are stemming from MiFID, and it adds to it. But again, I say that we will not be impinging or discussing into the interpretation of the level 1, but it is something on which indeed we have reflected and we had some thoughts. Yes.
One more point on STIRS, obviously. So, I mean, we still need this 1 more week to discuss with our members the position. We will make some suggestions, but overall it is, I think we have had to recognize that a little bit more proportionalities for the STIRS proposal might be a good thing to do. There's also a mismatch between the Euribor and the ESMA market. But again, we need a little bit more debate, but I just really think we should think about a more proportionate approach when it comes to STIRS. And maybe also to the extent and the thinking that was done for Polish zloty. So I think we could think about that.
We are not taking away the extra week, of course. What I'm asking is that you try to be as much as possible data-driven in your submission to help also our analysis and to challenge what we have done as the case may be. You know that we will have then to do the feedback report, which we will be doing carefully. But please, yes, don't just say yes or no, or this we don't like very much. All the supporting details that you can put there will help us in finalizing hopefully something meaningful.
I mean, perhaps one last comment from my side on this section. the comparison Corinna made between STIRS and Polish zloty is probably not an appropriate comparison. I mean, Polish zloty is a very, very small market. STIRS is a huge market where already today some business is taking place at very competitive terms in the EU. So I think making this comparison is probably not most appropriate in this context.
I take the point.
So you see, it's good to have the hearing also to interact. Okay, if not, we can move to the third part on reporting, where from certain of the opening statement, I can assume we will have a little bit more of discussion. Please, Claire or Raphael.
Thank you, Nicoletta. So yes, this is the third and last section of the consultation paper, but which also reflects back on a number of the requirements which we have outlined before. So of course we realize there is some back and forth here. Also to highlight that the level 1 is also quite detailed and stringent there, as it's also the outline in Article 7b in this case, which may have been less looked at during the negotiations, but is still extremely relevant for the work of the competent authorities and down the line for ESMA. So just as a quick reminder, the requirement applies on the counterparty subject to the active account requirement, and it's required to calculate its activities and risk exposures in the relevant categories of derivatives, but also to report every 6 months to its competent authority, not to ESMA, the information necessary to assess their compliance with the active account requirement. So this is our starting place. It further adds also that the counterparties shall use the information reported under Article 9 where relevant, but that they shall use it. So in our view, this means that the counterparties also have to reuse the same data which is reported from the trade repositories as the level 1 currently stands. But of course, happy to hear your views on this point. I think that the first aspect that we've tried to cover in our draft RTS is the point on the reporting of the activities and risk exposures per counterparty. What we have proposed is that, first of all, this information covers general information on the counterparty, so their name, the LEI, whether they're financial, non-financial, the corporate sector, their clearing thresholds, etc., the group structure to which they belong, including subsidiaries both within and outside the EU. Secondly, in table 2 of the annex, we've also included information on the level of activities and risk exposures. So by that, we propose to include both gross and net notional amounts, the number of trades, but also for this risk dimension to look at the aggregate value of the initial and variable margin, including the haircuts, but also for this to be reported for different fields and dimensions, where it's cleared, uncleared, at which CCP, etc. Finally, we've also proposed including the list of the unique trade identifiers for the relevant derivative contracts to enable also the competent authority, so the supervisors, to be able to verify this information under this new article, and to be able to compare it with regards to the reporting information that's already there under Article 9 in case they have questions or want to see that it matches. The second aspect of the reporting, of course, will also focus on how the counterparties are able to demonstrate that they meet with the operational conditions that we've discussed at the beginning of this public hearing. Indeed, in the level 1, the counterparty is obliged to report to the authority all the information necessary to assess the compliance. So this is where, again, we start. But the Article 7b also further adds that this reporting should also include a demonstration to the competent authority that the legal documentation, the IT connectivity, and the internal processes associated with the active accounts are in place. So what we've tried to outline in the draft RTS for the consultation is that the counterparties have to report to the competent authority, not the contract in itself, but at least a written statement that a contract is in place. For every reporting, just to notify also the competent authority whether there are any major changes to the last reports on the internal policies. A written statement similarly that the IT connectivity is still there and standing, and information on the cash and collateral account. So this corresponds more or less to your condition A. And similarly, for conditions B and C and their stress testing, there again, I have to insist that the level 1 restates that the counterparty has to report every 6 months to their competent authority information on their resources and systems that they have put in place to ensure that condition B is met. For some reason, this one is really outlined and specified differently. So we need to also make sure that this is taken into account. There again, we would rely only on the reporting of a description of the material changes since the previous report on the internal systems to monitor the counterparty's exposures or arrangements to support a large flow of transactions. So to report if there are changes compared to the first one. Information we've discussed on the staff member about resources. Of course, these two will have to be aligned. As well as a copy of the written statement from the CCP confirming that the account has the operational capacity to support a large increase. Same for the stress testing requirement. And finally, that a written statement that a counterparty has actually tested via technical and functional tests its own operational capacity and the IT connectivity, which was described also in the operational conditions. Last but not least, there's the point on the reporting of the representativeness criteria, as we have to go for all of them. This fortunately would apply only to counterparties which are subject to the active account requirement, but also above with this notional amount outstanding cleared of more than 6 billion. And they'll have to report information to their competent authority to be able to assess whether the trades are indeed representative of what they actually clear at a clearing service of substantial systemic importance. For that, we have proposed in the draft RTS that the counterparty should report to their competent authority the subcategories, which are the most relevant per class of derivative contracts. This is based on their own clearing activity, so they'll have to report that. Also number of trades in each subcategory per class of derivatives, but also based on their activity in the in the clearing service of substantial systemic importance, both third country and EU CCP. And finally, whether they are eligible to some of the exemptions or alleviations that we've mentioned before. For example, that they're only allowed to clear 1 trade per subcategory instead of 5. So they notify this to the competent authority. And finally, the last element in the representativeness criteria was the point also on the reference period, which one applies based on your own clearing activity. So that's a brief, also a review of what we have there. Perhaps just one last point to note. As you're aware, EMIR 3 does not include a mandate for an implementing technical standard. We just have an RTS. So depending also on how we progress with this final reports and the RTS, ESMA may also consider to adopt further guidance to help the industry also implement those requirements. But this will not be an ITS per se, but we leave ourselves some room for maneuver to propose more and support you in that direction. I think that's all on my end. I think we can start reviewing the questions, and I hand back to you, Nicoletta, for the set of questions. Perhaps also, yes, to highlight some of on the first point for risk of exposures, we added 2 specific questions on the information on the margin activity and on the UTIs, but please feel free to cover any aspects in the reporting requirements. Of course, your feedback is very welcome here.
Indeed, thank you very much. FIA, Corina.
I repeat, this is the part where we strongly disagree with the ESMA proposal, and yeah, so it's basically a complete new reporting regime, which goes counter to all the developments we see. I think Draghi letter, Ursula von der Leyen, everybody would disagree. Everybody is looking into a reduction of the burden on the reporting of the activities and risk exposure to include margin and OTI raised question marks. Is it really needed? Is it really also a requirement by level 1? And then also we need to think about, I mean, when we discussed during the trilogues or even with the commissioner when the proposal came out on the reporting of operational conditions and representativeness obligations, that we were always told, well, ESMA and the NCAs can reuse the TR data. I do understand there was a trilogue, and obviously things were made a little bit more complicated, but the level 1 text also says counterparties should reuse TR data where available. So I just really think we're adding an enormous amount of complexity and burden again to members. We will suggest, and we are still working on a proposal, can we not work with some form of attestation by the counterparty in scope to the NCA and ESMA, or so we're working on that. But yes, this is the part where we strongly disagree.
Thank you. Of course, we will look, we are eager to receive the submission. You have to be reminded there would need to be a system of reporting, because it is in the level 1, even if not so developed, and we will have ESMA to receive from the NCAs the relevant information, and subsequently issue the famous reports on the implementation of the article, etc., that you would remember exist and have to be provided to the co-legislator, etc., for their future thinking. So information we need indeed to be received, but happy to consider all sorts of submission, and we are understanding that you have strong reservations there. Hurik.
Thanks, Nicoletta. Yeah, I was about to make more or less the same point that Corinna made. Obviously, kind of there is level 1. Level 1 kind of has some data points that need to be reported. If there are new data points, I reckon fair enough. That needs to be done somehow. But I wonder if we could encourage them to, let's say, to a more adventurous interpretation of a sentence counterparty shall use information reported under Article 9 where relevant. If maybe use also can mean refer to information already transmitted, because it doesn't really make sense to kind of somehow set up a parallel reporting of the same data points that already has been reported into trade repositories. And I think if you just look at this, sentence in itself, it's meaningless because it just means, let's say, if you have to report a notional again, yes, you report a data point that has already been reported under Article 9, but it doesn't help whatsoever. And I think probably maybe while not being drafted nice, kind of well, the intention of the co-legislators was actually to make things easier for folks. And I would also assume that nobody in the parties involved in the trilogue would be very annoyed at you if you come up with a reporting regime that takes into account data that already is in the trade repositories.
Thank you.
Nothing much to add. Maybe another thought. I would expect that the supervisors, ESMA, and the local ones will probably also look in any way beyond the reports if they do their job. So the misunderstanding of the level 1 text is that this is sort of the sole data source. That's unrealistic on level 1, not in your report. But so maybe this can help to put as an argument. If the data is already available, you can sort of or find better data somewhere else. That could be an argument to say we don't need it in this reporting review. But anything which makes it helpful to the supervisory authorities, but also less burdensome is, I think, what everyone wants.
We hope.
No. Yeah. No. Understood. But it is.
We accept the but
No, the problem is that the level 1 really sees this sort of as a wasteland where there's no information, and that's just, and they have to create something, and that's just not the case. And so we have to, we see that it has a function, so we have to be sure that the function can be fulfilled. But anything, everything, it's.
Thank you.
Thank you. Franco from EFAMA. Basically, to echo on what has been said before these comments, we also believe that following our previous, our current analysis of the proposed draft RTS, most of the data fields which are proposed in the tables referenced in Article 7 of the RTS are already being reported by the counterparties and are sitting with the trade repositories according to the obligations of Article 9. And to have to repurpose and duplicate these efforts again would run counter to the objectives and the progress that was achieved by EMIR refit in terms of simplifying and streamlining reporting requirements for counterparties. We are also working, of course, in the proposal that we would like to come up to simplify the draft RTS as it stands today, which will also be something running along the lines of maybe an attestation or some form of repurposing and reformatting of standardized formats that are in use today, of course, for the sake of simplifying efforts and costs for market participants.
Indeed, happy to receive all the suggestions. Remind that not only ESMA will have to do this monitoring for the reporting, but also the NCAs should ensure that the requirements are complied with. And if the information is not there, they will not.
Yeah, but you have been you have a lot of information already under Article 9 in the TR, and you have access to it. The NCAs have access to it. I think you're missing some third country activity, but there could be some solution found. So there is a lot of information out there already.
Part of the third country activity information.
But we could work on solutions. Yeah.
I don't know what happens, what happens with our macro. I hope that you will work with some workable solution that we can consider. I see that there is a query on the 85% of the trades. I would say, but this is a level 1 question. Again, I say that we will not be discussing level 1. I would say that it has to be on the trades already traded in EU, not what could be done in the future. On the and also there is a question on the format of the reporting and the channel for the submission. Now we don't have a specific mandate there. In the consultation paper, we refer to additional guidelines that we may issue, but of course this is all subject to what will be then the final part of the RTS on these requirements, reporting requirements. Let me see if I don't see, yeah, Bill standing.
Hello again. Just a couple of points. One on some of the details in some of the reporting. In terms of scope, I note that EMIR 3's purpose is to address perceived weaknesses in the cleared derivatives market and excessive use of tier 2 third country CCPs. So I'm curious to understand why the scope of the reporting includes uncleared derivatives, which will remain uncleared whether they are cleared whether clearing is predominantly in the third country or within the EU. That seems to me to be a little bit of an extension of scope that significantly increases the burden of reporting. I'm not quite sure what the value of that would be. That's a first question.
I can try to give an indication as to why this was included. To determine whether a counterparty is subject to the active account requirement, there's a double condition, and the first condition being that you're subject to the clearing obligation. Under the current EMIR, this includes both uncleared and cleared activities for both financial and non-financial counterparties. This is the basis on which we've elaborated the draft RTS. Of course, there will be changes to come down the line under EMIR 3, which is driven by another department in ESMA. This being said, for financial counterparties, they still will have to include both their uncleared and cleared activities. So this is why we need to have this information as well to for the determination as to whether the
But I think
counterparty is subject to the active account requirements, and that's how they look at their stock.
but I'm not sure how the margin on the active account requirement relates to that requirement. The notional does, but that's already reported under existing trade repository reporting. But the margin requirements and all that other data around them, I don't quite follow how that links. We can take that up. We'll refer to that in our response. Secondly, just on margins, I would point out that for cleared margins for the products subject to EMIR 3, we do not have the margin numbers. We have portfolios of multiple products at CCPs that include these products, but also net against other products. So we do not quite understand how we will provide the margins specifically for the products in scope. That number does not exist as best we can tell. And I think that probably leads me to my third point here, which is really around the line by line, the UTIs. I'm not familiar with other regulations where we demonstrate our compliance by reporting every transaction that we do. So take, for example, the location requirements for transacting under MiFID. We have internal controls that dictate, that review the execution processes, and we update our NCAs in terms of control breaches or lack of control breaches is the plan. We certainly don't report line by line every trade to our NCA so that they can double check that for us. They come in and audit us appropriately. So I'm not quite sure why we need to do that for EMIR 3.
Thank you for the follow-up. I think, I mean, it's also one of the reasons why we've highlighted these or specified further these two questions. I think one point was to find the appropriate metrics for the risk exposures, which are required under the level 1, and hence margin came up regularly. But we're aware of some of the difficulties that you point out too. So any more specific feedback as to why this would be particularly complicated or unsuitable would be points that we'd be very happy to hear your feedback on and as part of your response. So we're aware, but if you could detail these further in your response, that would be helpful for us.
Certainly. Just to be clear, we are creating another enormous monster here if we do line by line reporting and full margin across everything. The scale of that across 1,100 firms, potentially across the EU, is something quite immense. But we'll revert.
Thank you, Corinna.
Really what I mentioned earlier, and I think Franco supported the attestation. So I think what we do agree, because I have not met anyone else, that this complete new reporting regime will not contribute to one other goal, increasing the attractiveness of EU derivatives clearing. But can we debate a little bit the attestation? Because I think this would really help, because also the other thing I see, obviously, again, our EU participants are at a competitive disadvantage with this reporting regime, and attestation basically to the NCA that they are compliant with the requirements. There is obviously as well of non-compliance. There is obviously other tool of penalties which are significant. I mean, there basically there are tools in EMIR 3.0 that would lead basically to members, to participants to be compliant. The incentives are there to comply with the requirements. That's what I want to say. And a simple attestation might be the answer.
Well, information has to be provided, because it has to be provided to the NCAs, then it has to be provided to us to assess the implementation of the active account requirement, which means also the type of activity, the trade, comparing with what was the behavior before of the entities, etc. I could, let's say, understand if you were to say Okay, instead of this amount of reporting, you have at certain point in time a reporting which is coming from the CCP that indicates though the number of trades, how they have implemented the representativeness criteria, etc. Something that simply say, I comply, I certify to you that I comply with the regulation, I would find it a little bit too generic. Certain
Yeah, see there actually hands up.
I have Perrine here with one hand up.
Thank you, Nicoletta. Maybe just to add a couple of from Esther's perspective, I think it would be really interesting to understand what, and I think in line with what Bill said, what the value of the information on VM and IM is. I think we really struggle to understand why that would be necessary to monitor compliance with the activities and risk exposure of the counterparty. The second point I wanted to make is around the UTI. So, if I understand correctly, ESMA kind of sees some of the merit of it is to be able to cross-check with what's already reported under Article 9, but we feel like if you just got the data which is already reporting under Article 9, then you would get kind of the data as a source. So we don't really understand the purpose of this additional reporting. And if you even see in the ESMA's own impact assessment, it recognizes that the other policy option, the one that was not selected, would be sufficient to assess compliance with the requirement, but nevertheless, ESMA chose the option that was going beyond what was necessary to comply, to monitor compliance, and I think that gets a bit concerned, particularly given the emphasis about reducing the reporting burden. We feel that this is really going in a very different direction. And then briefly, the other 2 points. We also know that for counterparties that make use of delegated reporting under EMIR Article 9, it would be very burdensome to report the required information. They will not have any of the reports, they might not have any reporting infrastructure in place. And the last one is to very much support ESMA's proposal to provide level 3 guidance. We see that there is no ITS envisaged in level 1, but I think that has already become clear. I think we would really appreciate some further kind of guidance later down the road about how to report. So we thank ESMA for this. Thanks.
Thank you. Any other, please.
Can I maybe just ask a question? I think, Claire, that goes to you. You mentioned that you require the uncleared transaction to more or less check up on the clearing calculation or attestation of a clearing obligation. My understanding, and I have to admit, that's not something I'm very, very familiar with, but at the moment, you don't have this data for kind of the last 10 years since ESMA was in force. You don't have this data to the clearing obligation either. I think it was more or less an attestation system that firms said they are under clearing obligation. You probably have can look at the data in the trade repository, but again, that would be the same now, wouldn't it?
Or is this about the notification or about the reporting?
I think both. So my point is really just my understanding at the moment is that the clearing obligation is more or less an attestation thing. You don't have data as you now asked for. So why didn't the last 10 years? Why was that okay, and why now you need so much more data?
Now it's because it's linked to the obligation to comply with the active account and the second condition, isn't it? but we will reflect. We know that there is a notification on whether or not you are obliged to comply with the clearing obligation. That we know.
I mean, perhaps this is a point where we need, we can also check internally, but in our view, the reporting did cover also the uncleared activity to be able to calculate whether the clearing thresholds were breached. So under the reporting, yes, perhaps not under the notification, that I would have to check with the colleagues at hand. But I think the discussion on the margins is a separate one. One is the question is how do you get to the notional figure? And I think this includes both uncleared and cleared activity today. But
Yeah, maybe just to clarify, my point is really just that my understanding is at the moment, firms testify that they are under or above a clearing obligation, but they don't have to do this dedicated reporting only for that. You either have the data via the trade repositories, you don't have it. So you now say now you want the data because you want to check if firms are under or above a clearing obligation. So it's kind of now a different, it feels to me like it's a different level of evidence that has to be provided. And at a time where everybody is talking about burden reduction, I'm not quite sure if that is maybe, it doesn't make so much sense now to ask for more data than you had the last 10 years.
Ulrich, the burden reduction, etc. You know that ESMA, we will try to ask only what we think is necessary to NCAs to monitor compliance, and for us to monitor also in order to be able to present the reports that we are requested to report. I see that there is another reaction because I see a hand over there, please.
Sorry.
I have a comment, but it's on a different topic. So
Then maybe I will take a Bill Standing
Sorry.
that I think is still on this reporting.
Yeah, just very quick question to help us with our final deliberations on how we can propose a viable alternative. Given that ESMA is active, as I understand it, in the supervision of both authorized and recognized CCPs, is there a particular reason why this data cannot be obtained through that process directly from the CCPs?
We
Is there
can
a reason?
obtain from the tier 2 a certain amount of information. We cannot obtain from the other CCP recognized under Article 25, which is what the level 1 requires. The level 1 requires information, not only limited to the tier 2 CCPs.
And you can obtain this also from the authorized CCPs? Within the...
No.
Because I understood under EMIR 3 that ESMA is to be the co-chair of the colleges for the authorized CCPs, or did I misunderstand?
Well, co-chair of the colleges doesn't mean that we can ask everything we want. There is an article on monthly reporting of the European CCPs that have to be implemented, but one thing is also the information that is available to the CCP. Something else is the information on the activity of each clearing member and client. But
before OTC clearing, it's a named. So there is an issue. Yes, I grant you that with STIRS, but for the OTC derivative clearing, all accounts are named. So you're saying really the information gap is really with third country non-tier 2 CCPs, which is CME.
But we will see all the submission for this reporting. But yes, we need to have a comprehensive view, and we need to be able to respect the level 1 that requires reporting. It's also indicating certain type of information to be submitted. Reflect on it. We will be more than happy then to consider all sort of contribution that we can work on.
Thank you.
Thank you. Then Franco, you wanted to say something.
Yes, thank you. 2 points. I think you said it was mentioned in the chat, but I'm not connected, so I will insist on this point just in case. Regarding the 85% exemption, I think you mentioned at the beginning that ESMA will not discuss it at this time because it pertains to the level 1, but it is our belief that in the way it is being drafted in the RTS or rather in the consultation paper, it has gone beyond what was originally intended in the level 1. So I think it's relevant to maybe discuss it. And I'm referring to the 12-month look-back period. There is no reference of a 12-month look-back period in the level 1 itself. And we believe that the way it's being drafted at the time does not serve as a correct incentive for counterparties to migrate their activity to an EU CCP. So that was my first point. And maybe moving towards the second, more associated towards reporting obligations. We also know that at the moment there is no clarification as to when the notification of counterparties to ESMA and to the NCA regarding the enfolding scope of the active account requirement should happen. We sent a letter to ESMA this morning about this subject. And basically, we believe it would be very helpful if ESMA could at some point clarify this point and confirm which will be these dates, given at the moment there's a lot of confusion regarding what will be the date in practice. And this could lead to problems down the line and a disorderly introduction of EMIR 3.0.
Well, I mean, frankly speaking, I find it a little bit, the Commission was very clear. EMIR 3 is a regulation. It applies from the date of entry into force, which, if I'm not mistaken, it was 24th of December. ESMA did work full speed to put up in our website the notification template for receiving this notification. So if you ask me, then you can check with the Commission. But if you ask me, the obligation is applicable as from the 24th of December, and the entity should be prepared. On the
Excuse
other
me,
issue,
on this, Nicoletta, can you please remind us on which date the templates were made available?
20th of December, it was available on our website.
With the weekend in between, right?
But frankly speaking, we have done what we could in order to implement what we thought it was a level 1 requirement. As I said at the beginning, we are not here to discuss level 1. You may like it or not. We have tried to do our best, and notwithstanding the need to find agreement with all the NCAs, etc. And I have to commend all the work that they have done throughout all these months with us to try to put forward everything in order to agitate the compliance by the entity subject. But I'm going to stop this discussion here. I don't intend to continue on this. On the issue of the 85%, as I said before, my understanding is that it has to be on existing requirement, but Claire can clarify what we have put in the level 1.
Oh, yeah, in the consultation paper, we referred back to the recital, which states that they have to take into account the situation of counterparties that are already clearing a significant amount of their transactions. And this is why we understood this as referring more to the stock than to new trades. But that was the basis of our own reflection for, again, the way we've conducted our internal data analysis. This does not stand as level 1 interpretation, but it gives you it does give you an indication as to what was our thinking when we did our calculations internally. But this is where it came from, right? It's because of the recital, which guided our thinking. On the 12 months, we tried to align it with the different thresholds, which were also based on the stock, so that it was as coherent as possible. We're aware that the text is convoluted, but we try to bring some consistency, at least to the way we've structured, again, our cost-benefit analysis. But I would, and this is, believe me, not a wish to close the discussion, but more to invite you to address also those questions to the European Commission in case they can actually take a more official and public view on those points, also to make sure that we're all aligned. We tried to outline this in the consultation paper so that you actually had a sense as to what was our thinking. We hope this was at least somewhat helpful. But if there's something where you have, of course, a different view on, I think it's a good place to address your questions would be to the European Commission going forward also.
Corina.
Grazie. I need to just quickly move back to reporting. There is, and I just really think we all need to be strategic. Yes. So I think what I wanted to say is I want to push you back to the reporting regime. And I think we all need to be more strategic. On the 26th of February, all the DGs in Brussels are sitting and coming out with proposals on the 26th of February, how to reduce the burden on EU participants and how to make Europe more competitive. So I think maybe we can think a little bit more about attestation in the areas. So for the attestation for the counterparties to confirm to their NCAs that they are compliant. And then we look at actually where are the gaps, and then think about how can these gaps be filled instead of creating a regime that is disproportionate and that would not survive a risk, basically a burden reduction exercise thinking. And also it goes to Brussels, obviously, it will make us just a lot busy to talk to the stakeholders than in Brussels. I just really think maybe before we can come up with good solutions.
Corina, as I said, we are happy to consider all sorts of suggestions. ESMA is part of this burden reduction exercise, and certainly we don't want to transform Europe in something which is not competitive. One of the objectives of the implementation of this regulation in its various components, including those on the CCP requirements and procedure, is to increase the attractiveness of the European markets. Therefore, we would be more than happy to discuss suggestion. If you think that identifying the gaps and we can, the NCAs and ESMA, because as I said, it's not ESMA and this is something that is vehiculated through the NCAs. We can work with it while satisfying the basic requirements which are in the level 1 as they are and on which the Commission is also very keen. We are happy to consider. We are here for this sort of consultation. There will be the feedback statement. There will be the further check from the Commission, of course, because ultimately the Commission will endorse it, but they will be participating in all our discussion. And of course, one issue on which we all were very keen with the NCAs and the participants to the policy committee was indeed to be able to check that the requirements that are in the level 1 are complied with, because we will also be requested to make additional assessment proposals coming forward. And one of the issues that nobody wants is, again, to be said that the proposals are not well grounded because there is no enough information about the activity performed at third country CCPs, because there are different treatments of the third country CCPs, you know, because business is moving from certain CCPs to other, etc. In third countries, I mean. So please try to be creative, try to help us in better shaping this part of the RTS. Happy to consider. Just don't say, I'm saying to all the respondents, also those who are in remote, don't simply say no, no, or this is too much. Just try to give us some food for thought so that we can really streamline our requests.
Yeah, you touched on the exemptions, which we didn't really tackle, which are in the part before the operational conditions are defined. And we discussed a lot about proportionality. And I think the 85 requirement is clearly coming from the level 1. The question I would bring into would want to bring into the discussion, because it could create a win-win situation, is whether there is a possibility to phase these 85% in, to start with a lower threshold, because then people would be exempted from the reporting obligations, from everything pretty much, and are allowed to, in steps, get into this new situation. And I guess that would resonate well, in particular with smaller players, and I guess would also help to achieve your objective finally to get more business into the EU. So maybe some thought on a phasing in for the exemption could make sense.
Thank you. Of course, as I said before, we will need to be compliant with what is in the level 1. Are there other interventions from the room or from remote?
There is no explicit mentioning of the possibility of a delegation for clearing participants that do client clearing. Is that something that could be included in the RTS to make this a clear possibility for client clearing service providers and users?
That's a good point that we've also considered in our own internal reflections. Unfortunately, I think that especially when in places of the regulation where possibilities for delegations are explicitly mentioned, and in others where they are not, as supposed to be, there has to be a reason behind this. So it's difficult for us to just to be clearer, I think it's because it's not mentioned, it's something that we may not be able to use because it's mentioned explicitly elsewhere in the regulation. So we can still consider this as part of your response. We'll continue reflecting on this, but initial views were that this may be difficult, unfortunately.
That would mean that if you use client clearing and you have a delegated reporting in place, that you are in trouble, right?
Maybe that's some point also that we can check with our colleagues from the commission. I see the difficulty in the reporting requirements not being aligned on the delegation possibility. We're aware of that point in particular. We just note that unfortunately, like many things, like there is no ITS, there is no mention for delegation. So we need to see what we can do with what we've been given. But we're aware that this is a problem indeed.
Especially when you consider that the legal text allows or asks for reusing Article 9 data, which is exactly for the group of client clearer and delegated reporter very difficult, because the only possibility they have using transactional data would be by the reports they receive from their service provider. And on the other hand, I would like to add that, for example, under Article 26 of MIFIR, there is no delegation in the exact meaning as in Article 9. But there are, on the other hand, there are lots of market participants using a delegation. Even so, it's not written in the text. So I wonder why that could not be included and make it more easy and more precise for the market participants.
We'll reflect on it, and we expect also your formal response to the consultation. I don't see any hand from the remote audience, and I don't see anybody else from the room. If this is the case, Klaus, I think we can close the hearing. Thank you very much, all the participants and the contributors. We recommend to send us your formal responses with all the elements you can attach to it. Corina, you have something else?
Scusa tanto, but I have just quickly. So just really the closing on the reporting, we need to fix it. So that's, and I think there were actually brilliant suggestions. I think it's really worth exploring. But just really, I think it was mentioned on in the very beginning, but in paragraph 40 of your consultation paper, we absolutely agree with the with your interpretation of that one entity of the group can fulfill the active account requirements. The question is, does this also basically apply that this one entity can also fulfill the reporting obligations and other obligations? Is that something you can respond now?
Well, we are still, our intention, our will was indeed at the beginning to have one entity per group to simplify as much as possible. There are a number of legal, let's say, hiccups. We also advise you to respond if you like this type of approach, in the sense that what we are proposing here, because we will have to revise, legally, etc. As you know, we were working very, very hard. We don't want, all the entities of the group to have the same representativeness, to have the same traits, etc. But please.
No, I just really think this was an excellent hearing, and we should do this more often. It was really brilliant, and I appreciate it.
Thank you very much. With this, I think we can close, thanking all the participants, again inviting all to submit responses substantiated by relevant data, etc. Just no yes and no responses, because this will not help us very much in the preparation then of the feedback state and cost benefit analysis. Thank you.